Hello, welcome back. In this video we are taking a look at Digital Turbine. This is a company that was suggested in Discord in our discussions, and in case you are interested in joining us, you can find the link in the description box below this video. Come along, we're having some nice discussions. But we were talking about this one pretty much today, and I thought it's an interesting one to examine and make a video for. It's an advertising platform, as you will see here, a small company with a relatively high beta here. Actually, probably a very high beta, not even a relatively high. And this one is a 2006 IPO. Again, it's still a small company, but it has been massively suppressed, and that is why it becomes even more interesting right now. It's down 72% almost from its 1-year high. And if you take a look at the 3-year chart, you will kind of see that it has boomed tremendously in the past few years. Now it's trending lower. And last session it did gain a little bit, but it may be an interesting purchase. Of course, we need to examine it financially, see how it's doing, and see whether it makes any sense to actually buy into this one right now. But if you take a look at the stock news, you will see that it's about to report Q4 earnings. I believe, actually, it's market close today, if I'm not mistaken. But let's go back and see what is happening here with this one, which has, of course, had a loss during the pandemic years for the most part. You will see that the PE ratio is still relatively high, 59, and price to free cash flow ratio 48 here, even though it's down a lot from its 1-year high. Now, the outstanding shares up 45%, which is something that I hate to see. And what I mostly hate to see is the fact that it's almost linear here. It seems to be going up and up and up every year, and I hate to see that. Even as the prices get suppressed here, it looks like the company is still selling stock, issuing shares. Now, the company doesn't have a lot of debt here, it looks like, and total liabilities, because they can use last year's free cash flow to pay back all their liabilities in 2 years. This is great to see, of course, because it points to a solvent company, a company that probably shouldn't have a lot of trouble navigating their operations and debt pretty much. And their growth numbers are great, looking great here, 200%, 300%, 700, 130. It's great. Things are looking pretty nice here in terms of growth for the company. That's something that you'll have to see, but at a good price, of course. And you will notice here that the returns on equity, for example, is at 11%. It's fair. And net income margin, that is a very interesting one here. Very interesting one. Take a look at this one. This has been suppressed a lot lately. 4.58 is the last 12-month one. And if you take a look at what was happening before that, we were having higher margins till 2021, for example. And so if we go and use our stock evaluation tool, it will show us what has been happening in the previous years. But we need to account for this loss here, for this drop of the net income margin going down quite a lot actually in the past 12 months. So it looks like we're having very suppressed margins here for the company. And we have to factor that in our calculations. Now, this may not continue happening, of course, as we are exiting the pandemic and potentially going back to normal operations. But maybe it will. Maybe we'll have a suppression in the overall economy, and that will definitely affect advertising. But first, let's take a look at the income statement of the company, see what's going on here. From 91 million to 313 million here, and the net income from negative to positive, which of course you'd love to see. 54, 55 almost million over here. Hope the company can continue doing that. And the balance sheet here, you will notice that the total equity has been increasing as well, 62 million to 145 million here. Notice that the total liabilities are sitting at 115 million here. So 115 million is what it is. And if we take a look at the cash flow statement, you will notice that their free cash flow has been 53.59 million here. So it's about 2-point-something years of free cash flow to pay back all the total liabilities that the company has, which includes debt as well. So the company doesn't have a lot of debt and not even a lot of total liabilities here. And in terms of their net income, that translates to operating cash flow here, it's fairly healthy here, what I'm saying. 62 million in operating cash flow, which translates to about 54 in free cash flow. So good stuff here for the company for 2021 here. Now, the cash from financing activities and investing activities, very normal here. For the most part, some capital expenditures, a little bit of investing and acquisitions, and also you will see that the company is paying back a little bit of debt and financing as well, getting some extra debt too. Normal stuff here. Company has about 31 million in cash right now in their reserves. And if we take a look at the stock evaluation tool, let's see what we can do with this one here. The revenue has been increasing tremendously after having a couple of years that were not great here, but it has been increasing at a tremendous rate over here. And again, we are at a very low absolute number here. We're in the millions still, but it has been increasing nicely. Of course, I'll have to go more conservative, but I won't go too conservative. I will still use high numbers, 20, 22, and 24 is what I'm going to use. Now the net income margins is a little problematic here, is a little bit of a problem, because remember we saw a suppression of the net income margins in the last 12 months, and this was 2021 when the company made 17.5. This is not looking like it's the story right now. So I will start from 5. I'll have to go a little bit broad here and see what kind of different results I'm gonna make, because I'm really unclear on what the actual margins are going to be for this company in the next 5 years. So we're gonna try a few different scenarios here. We're gonna go 4, actually let's go 5, 10 and 15 and see what kind of reaction we're getting out of the price. Now the free cash flow margins that we're going to use here, I think I want to use similar margins here. Just to see how the net income actually affects the whole operations here and the whole projections. So in this video, I will actually use 100% of net income margin converting to free cash flow pretty much, which is typically similar to what the company did there last year, and fairly normal really. And the annual return that I'm going to use is 13%. Let's see what we're getting out of these projections here. When we hit calculate, we will see that at these projections here, we are still, even for a net margin of 15%, we are still getting that the company is expensive for what it is. It would still need to go down significantly in order to reach a buy price. And I just wanted to use this kind of different margins so that you see that even at the highest estimates here of 15%, it's still relatively expensive here. You would have to go more than 17%, I'm pretty sure, maybe even 20%. And even then, I'm not sure you would actually get to a reasonable price, really. It's closer, but it's still not where I would want it to be. So yeah, this looks like an interesting company that had a massive drop, but I would want more in order to enter this one, and probably significantly more. It seems to be going higher right now. It seems to be in a little bit of a, at least local uptrend, but that is a little bit irrelevant to what the company's financials are doing. And so right now, I think I would have to avoid this one, even though it has been down a lot. It may be a little bit expensive, even again, as it has been going down like 70%. I think I would want a steeper decline, maybe near the 10s, really, 12, 13 bucks maybe. If it goes down that much, maybe I will revisit. But yeah, that was what I wanted to talk about in this video. An interesting little company that we talked about on our Discord channel. Remember again that you can join us. Find a link in the description box below and come over. We are chatting pretty much every day. And if you're interested in this too, you can also become a patron. You can find links in the description box below, in which case you can get unlimited access to this one. Try all these things, all these tools and your projections. And yeah, I'd love to see you around. Please remember to leave a like. That really helps the channel. And subscribe if you are not a subscriber already. And I'll see you in the next video. Bye bye, guys.